Hey, Kevin here, top 1 financial advisor and best-selling author, and we are here to talk about the stock market. I got an interesting tweet that we should really talk about because it deals with corrections and can really help us to navigate the stock market right about now. Today, the market was not good. We're still dealing with the Russian-Ukraine conflict, and we don't know how long this is going to last. However, I do think this is an opportunity for investors who are long-term focused. So if you're already invested, like I am, and like we talked about yesterday, you can sit back and do nothing, and this tweet can help you to confirm that. But also, if you are new, well, I don't think it is time to do anything fancy where you're trying to really game the situation. If there's a good quality stock that's out there, maybe it's a Lowe's, maybe it's a Target, maybe it's a JP Morgan, whatever that thing is going to be for you. And we got suggestions in a lot of videos that we did earlier this year that this could still be a decent time to say, look, I know it's not great. I'm going to invest now. I'm going to leave things be and just zoom out and just let things go. And here's a tweet. So I found this, one of my favorite follows on Instagram. I'll put the tweet here as well, from financial advisor KC. Great account, one of my favorite people. Anyway, they found a tweet from Ryan Derrick, and it says the S&P 500 officially moved into correction territory. Correction territory is when the stock market drops 10% from its most recent high, which means I think the most recent high was like the end of December. Remember, we had 70 all-time highs back then. Not this year, at least not yet, but we're down 10% from whatever the most recent high was. This is the 33rd correction or bear market. Bear market means like 20% or more. But it's the 33rd correction or bear market, so together, since 1980. Take note, he says, they aren't fun and no one likes it. I don't like it. There are people who say they think they like it and they're getting stuff at a discount. I mean, it's cool, but like, when I look at my account balance, I'm not having fun. Okay, but in any case, they're not fun and no one likes it. But the 1 year later, but the return 1 year later is nearly 25% and higher 90% of the time. So it means that a year from now, on average, that the return from now, assuming this is the bottom, which we don't know, but a year from now, we could be looking at up to 25%, again, probably on average. But even so, after this correction is over, or this bear market is over, whenever that's going to be, the stock market is up, it's positive 90% of the time. And this is why long-term investing makes sense. This is why I'm not necessarily panicking. I may not be having fun, but I'm not selling. I'm not, being afraid and trying to move from one thing to the next thing because X, Y, and Z is happening. That's why I'm sitting still. I'll invest a little bit on Friday, like I always do. But we've said this going back to 2020, really before then, but 2020 is when I really started doing more YouTube videos, stuff like that. But in either case, I said, look, those who are going to be profitable, those who are going to be successful in the market are those who are still investing right now, those who are staying pat and minding their business right now. A year from now, you might be all right. By the end of the year, you might be all right, because we saw what happened in 2020. This is one of those opportunities. It's one of those times where you say, look, I may not be trying to hop out there and get the fanciest thing. I may not be jumping out here and trying to say, oh, well, this is happening, let me jump on the hottest energy stock that I didn't do any research on. That may not make sense, right? But going to some of those quality stocks and companies, some that we've covered, some that you may be interested in, and saying, look, this company is okay, this company is fine, and the market is undervaluing it or overreacting to something, I'm going to pick it up at this price. I picked up shares of, I think it was Dick's Sporting Goods, just because I had a limit order, said buy Dick's Sporting Goods at this price. Yesterday it fell to that price for whatever reason. Dick's Sporting Goods was a fine company. Ain't got nothing to do with that. Whatever's going on in that part of the world, ain't got nothing to do with Dick's Sporting Goods. So I'm going to buy them, hold on to it, mind my business, right? So that's what you want to employ at this point in time. If you got some stocks and you're not sure where to go, you can sit there. That is an option, and I think that's a good one. You got stuff invested in the market and companies that we know, we understand, we trust. Sit still. You don't have to do nothing. If you want to continue to dollar cost average, you can definitely do that. I think that takes out the timing risk, and I think that's the biggest part. Because if I was sitting here to tell you the bottom of the market is going to be on next Tuesday, then I would say invest on Tuesday. I don't know that. I don't know when the bottom is going to be here, and anybody that just knows that, I feel like is lying. But because I don't know when the exact bottom is going to hit. I say on a regular basis, on a schedule. Maybe it's 2 weeks for you. Maybe it's every Tuesday. Maybe it's once a month. Whatever it's going to be. 1st and 15th. Mine is on Fridays. I'm going to nibble at and invest more in all the companies I was already invested in, and I'm gonna sit still and let things play out. I'm gonna invest a little bit less than what I normally would, so I can have a bigger cash position for when it is we ever find the bottom. And usually we don't know the bottom until it's like a week or two after and things are consistent. So again, what I'm going to do, which I've talked about, and this tweet information confirms that to a degree, I'm going to continue DCAing. I'm going to mind my business. I'm not having fun right now. That's totally fine. But the process has not changed. You have to remember, based on what it is that you are investing in, that the quality of that company probably has not changed. Apple was down significantly the other day. Ford was down. I talked about Target. It's baffling to me. CVS, I didn't see whether CVS was good or bad, but in either case, it don't have nothing to do with that. CVS, Dick's Sporting Goods, a lot of the companies that you may own right now, they're fine. There's nothing actually wrong with them, but the market's overreacting the same way we talked about a Netflix dropping 25% in a day. What? We know the market is overreacting because Nvidia dropped 6.5%, almost 7%, and they had record earnings. This is an opportunity. Relax, pick up any quality companies you got on a DCA basis, but if nothing else, build your cash, sit back, and just remain calm. Whatever you do, the worst case scenario in my view is to panic and sell. I don't think that makes sense because you saw what happened in 2020. If you panicked and sold in March, the market was up 18%, whatever it was, double digits, and you missed out on it. It's gone now, right? And then people who panicked and sold at some point in 2021 rather, market was up 20-something%, 27%, 26, 27%, whatever it was at that point in time. You missed out, okay? This is an opportunity. The market is down 10. Now again, what I don't implore you to do is just pile it in, throw it in tomorrow, because I don't know if 10% is going to be it. I don't know. I don't know if it's going to get worse. I don't know if it's going to get better. I don't know. So because I don't know, and I don't have a crystal ball, I don't see a crystal ball up in here. I've got a book. I got a trophy. And you can't see it here with some elephants up there. Ain't got nothing to do with me. So what I'm going to do is, hey, I don't know what time, so I'm going to invest all the time. I don't know what time, I'm going to just sit with what I have. I'm going to just build up some cash. Just deposit money in my account. I'm going to wait until I see an opportunity, and boom, I'm going to go for it. But while I'm doing that, I already got stocks here. Okay, that's the key thing. Now, if you have no stocks nowhere, that's a different conversation. I think you should invest in something, maybe index funds to get started. All right, so that is it for me. Remember, zoom out. It's a long-term game. We've been through this stuff before. Y'all remember at one point, when we were talking about the debt ceiling, the market was falling, and then it was up, and y'all were fine. Y'all forgot all about it, right? So obviously, these situations are not the exact same at all. However, do relax, do zoom out. If it takes a year, it takes a year. That's fine, right? I'm good with that. You should be too, because long-term investors tend to win out. All right, that is it for me. I will talk to y'all tomorrow. We'll see what happens in the market. But if you have any questions, any comments, any thoughts that make sense for a topic, feel free to put it in the comments and we'll talk about it. All right, that's it for me. Talk to you guys later. Bye.